Stocks rose broadly in morning trading on Wall Street Thursday as investors cheered a strong set of quarterly results from Macy's and other retailers. The S&P 500 rose 1.3% and is solidly in the green for the week, following a choppy few days of trading. The gains have positioned the benchmark index for its first weekly gain after 7 straight losses. The Dow Jones Industrial Average rose 1.3% and the Nasdaq rose 1.5%. The better-than-expected reports from retailers helped allay investors' worries about the sector, which took big losses last week after Target and Walmart reported dismal results. Meanwhile, as investors come off the high of the bull market last year, concerns are rising around quelling your emotions during a bear market. Well, joining us now to help us unpack this is Mr. Thomas Caldwell, Chair of Caldwell Securities Ltd. Sir, welcome back to Forum Daily.
Thank you, Nima.
Now, we know many investors actually borrowed to invest during the bull market last year, and a lot of them had not really experienced a bear market. So what should investors do now?
Well, you can't give a blanket piece of advice. Let me tell you one thing. One of the smarter things I did when I started our firm well over 40 years ago was no margin accounts. We felt investors should not borrow money to buy securities. It's one thing to be down 10 or 20% in a market. It's a completely different thing to be wiped out. And that's what happens when you use leverage. That is, you borrow money to buy securities. I think people were kind of lulled into the fact the market was continually moving up. And if they didn't have any money, they could borrow money and invest. And they were encouraged to do that. That's all right, but you have to consider risk. The point now is the market has pulled back. And if you were margined, and many people have been forced to sell securities to pay off that margin debt or to reduce it. I think at the present time, the market seems to want to stabilize a little bit here, but there's an old phrase, a cliche in our business, liquidate to the sleeping point. And, if you're upset and you're uptight about it and you've got money borrowed, get it down as best you can and live to fight another day. Don't worry about the grand slam at this point in time. Just get yourself in a position that you can hang in and make money as markets go forward. You just don't want to get forced to sell out because of margin debt.
Meanwhile, on the other hand, after 2 years of pandemic stress, we know Canadians are actually expected to spend more this summer. But what is the importance of saving and investing in your future, especially at this time, Mr. Caldwell?
Well, there's 2 ways to learn something. You can learn by listening to good advice, or you can learn through experience. One is easy, the other one is hard. And I think a lot of people have gone through very difficult times in this last little while. So my sense is that people are going to be a little bit more conservative on a go-forward basis, a little bit more careful about their spending, a little bit wiser when it comes to just keeping a little money aside, because what we've seen happen was a shock to everybody. So I think that's really a good lesson for people. So, just use your brain. That's the easiest thing. Just make sure you've got some money aside when things are difficult, because difficulty always comes, whether it be in a macro sense, like an economy or markets, or personal, something. You're always surprised by something. So it never hurts. I make better decisions when I have a little money in the bank and I can think calmer. And I think that's a good thing.
All right, sir. Well, inflation continues to dog investors and consumers, but it seems to be embedded in our lives for quite some time. So what are the best ways to cope with this new normal?
Well, it's funny. I was listening to a University of Alberta professor talking about increases in gas prices. And they were saying, what should people do? And he said, drive less and buy a smaller car. And I thought, wait a sec, this guy's a professor. If you're worried about gasoline prices being too high, buy some of the energy companies. We made a great deal of money for our clients by buying the energy companies when they were all down, when everybody's selling them. And so the fact that gasoline prices gone up, we made a lot more than that for our clients by the ownership of assets that are providing the gasoline and doing the refinery. So I still think inflation, the way you hedge against inflation is to own stuff. And by the way, stocks are considered stuff. That's you're owning companies that can generate income. So whether you own real estate or something that's going to go up in value, but I think equities are a very good way to deal with inflation. As far as the rest goes, individuals adjust their affairs according to their income. You don't buy steak, you buy hamburger. So that's part of what you're doing. People are smart enough to adjust their spending habits as they need to. And but if you want to hedge against it, then you have to own stuff. And I think basically equities are a very good hedge against inflation.
Always great advice, sir. Thank you again for joining us today on Forum Daily.
Thank you, Nima.